Welcome to Building the Perfect Portfolio. In this presentation, I will take you through a simple but very effective way to build an investment portfolio. Building wealth should be and can be one of the most rewarding and stress-free things we do in life. First, you'll need to get your financial house in order. Clear bad debt, spend a lot less than you make. Now you have money to invest on an ongoing basis. You're simply looking to make the most money over time. This chart shows what could happen if you maxed out your $6,000 annual TFSA contribution. Over 25 years, the portfolio might grow to over $800,000. Incredible. The assets that historically delivered the greatest returns over time are stocks and real estate. Stocks and REITs historically have delivered incredible returns, but as we say in the investment world, past performance does not guarantee future returns. But with stocks, there's no such thing as average. Some years and periods are terrible. Here's the annual returns for US stocks over the last 25 years. Once we get into periods of 10, 15, 20 years or more, the odds of success are wonderful. What is a stock? When you own a stock, you own a piece of a company. You own a percentage of the profits. When your company does well, you do well. Who are the richest folks on earth? They own companies, businesses like this guy. You can join them, and you should join them. You'll own many companies. In fact, a typical well-diversified stock portfolio, you'll own hundreds, if not thousands, of different companies. You don't want to put all of your eggs in one basket, as they say. You can own funds that buy the entire stock market of a country. You'll own the stock markets in Canada, the US, Europe, and Asia. Stock markets can deliver wonderful returns, but they can be volatile. They can go up and down in a hurry. It can be a scary roller coaster ride. To lower the volatility, we can add bonds to the portfolio. Bonds work like shock absorbers. Add enough bonds to the portfolio, and we can turn that scary roller coaster ride into a kiddie coaster. Here's the shock absorber effect. In this example, we see a 100% stock portfolio down 50%, while a portfolio with 60% stocks is down 25%, and the 20% stock portfolio is only down by 5%. It is crucial that you understand and invest within your risk tolerance level. Once again, to recap, we are building the portfolio with these core assets. Once you have your portfolio mix figured out, building wealth should be as routine as brushing your teeth. Over time, the idea would be to increase your investment amounts as your income increases. Fortunately, there are investment products that do everything for you. These companies offer very well-diversified portfolios that are managed for you. Again, they will hold Canadian, US, and international stocks plus bonds in one complete package. And the fees are super low at 0.25%. Mutual funds will typically run you 2% or more. It is absolutely no contest. Building your own ETF portfolio. Once again, you may decide to build your own ETF portfolio. That will allow you to add even greater diversification, and you can keep your fees a little bit lower. You'll find ETFs available for all of the above, though you may decide again to keep it very simple with our 4 key assets, those portfolio building blocks. Here is a simple allocation model, and for what we would call a balanced growth portfolio. Simply cut the pie in 4 equal slices. You will then rebalance the portfolio on a regular schedule, every 6 months, for example. The idea is to keep the portfolio to the original target weights. In our example, it was 25% in each ETF. You'll find an ETF model portfolio page on Cut the Crap Investing. That offers portfolio model suggestions at various risk levels. And how do you buy ETFs? You would open an account with a discount brokerage. That's where and how we buy stocks and ETFs. Your bank will offer a discount brokerage. Other popular discount brokerages include Questrade, Qtrade, or Wealth Simple Trade, and that is a trading app. Here's an example from TD Bank brokerage platform. You would enter the ticker symbol XGRO, then 100 in the quantity box to purchase 100 shares or units of a balanced growth asset allocation ETF. Click buy. You've entered one symbol, and then quickly own thousands of companies around the world. The risk will be managed by a bond allocation. Placing a trade is easy. You enter a ticker symbol, the number of units you want to purchase, and press buy. But there are some important considerations. Work with your discount brokerage so that you understand the buy and sell process. You can send a note on Cut the Crap Investing, and I can direct you to additional educational resources. Use the contact form on the blog. Take control. Do the research to ensure that you understand the investment basics, but I can assure you that it's worth it. Taking control of your wealth building can be more than life-changing. You could build 2 to 3 times the wealth compared to paying an advisor 2% or more for advice and those high-fee funds. And then you can manage your own portfolio and access a fee-for-service planner for the very important financial plan. There's a quicker way to reach your financial destination, whether that be retirement or your form of financial freedom.